Good morning once again, and welcome back to the Haven Financial Group radio show. Thanks for spending some time with us this morning. And feel free to give us a call at 612-504-8400 and always havenfinancialgroup.com. Check out our classes, upcoming classes, and a variety of these retirement topics at Haven Financial Group. Proudly happy for our 10th year anniversary. How quickly 10 years goes by. It's hard to believe when we open the doors here. So again, we thank our clients and we thank those that we've been able to speak to over those 10 years, and God willing, another 10, and who knows how many more 10, Kim.
Absolutely. Well, congratulations to you and all of your wonderful staff. You know, time certainly does fly. You said we're coming upon the fourth quarter. I thought, wow, the fourth quarter already of 2025, which is an important time, the fourth quarter, certainly for tax planning purposes. But Larry, I think you also want to remind everybody that this is the time of open enrollment, correct?
Annual open enrollment, October 15th through December 7th. For those of you that are on Medicare, exploring Medicare, having these discussions in advance of when you need to get on Medicare, because there's lots of questions. It's why our Medicare Made Simple classes, which, by the way, Medicare is not simple. Healthcare can get very complicated. Mm-hmm. And I'll tell you, Glenn and Isabella at the office here do a great job educating. We have access to all the companies, and we are able to help. But make sure that you're leaning on somebody, that you're not just going with the first person who says, I think this one's the right one for you, without looking at all the options. Yeah. A discussion on companies should not happen. It should be, what are your healthcare needs? What medications are you taking? What doctors do you use? And the last thing would be comparing the costs of what insurance companies. So get on the right page with the right people to make sure you're not paying what a lot of Americans are paying. I just read a study, up to $700 a year by not being in the right plans.
Wow. Yeah. $700 a year is a lot. Having said all of that, Larry, we want to talk about some of the missteps that people want to avoid. But before we do, tell me, what do you think is one of the biggest missteps that folks make as they enter retirement?
Yeah, before I address that, because there's a couple that stick out, is, the accumulation years, building of your retirement monies and building for retirement. That's the accumulation years. And then you get to the preservation / distribution / preservation, those years. And I've heard it so many times. Just this last week, I heard it at least twice, where a couple both said, the guy that has helped us up until this point through our accumulation years got us here, but we do not have the confidence he can get us through the retirement years. And they are a different season of life. They certainly are. So I would say, no matter what age you are, but for sure, if you're, 5 years or in retirement or whatever it is, give us a call to talk through these things. But the big one is not having enough to last you through retirement. The big question, do I have enough to retire, or when am I going to run out of money based upon inflation, expenses, et cetera? Kind of an important question. Okay. Am I going to run out at 75, 95, or am I never going to run out of money? So we'll build out those projections. Yeah, life could happen, but we'll adapt when those life events happen. So that's a big one. Avoiding the stock market. Our wealth management, my investment team of 12, we do wealth management, and we would do it what you would expect of a wealth management company. Avoiding the stock market is, to perceive all the volatility, which can adversely affect long-term savings goals. Over the long run, the stock market will perform. It shows better returns over time. Now, those are longer periods of time, and retirees maybe don't have as much time. But avoiding it for many is not the right decision, or for not avoiding it to some degree could have the opposite effect. So we encourage our clients to stress test your portfolio, making sure you're in the right spot. You can weather the storm when things get rocky and choppy. And what I found is most people just don't know.
Sure.
They don't know because they're not really involved in their investments. They don't know because nobody's helping them explain how much risk they're taking. And they're really at the mercy of the timing of the market when they retire. And that can be very dangerous. So know what you're doing, whatever risk you're taking. Stress test the portfolio. That's a good place. But avoiding it is the wrong decision for some, and avoiding it more is the right decision for many others. So that's just a couple.
Sure. I think neglecting estate planning has to be one of the big ones. I realize that this is a really difficult subject to broach, but for as difficult as it may seem for two people to address this, imagine how difficult it would be for those you leave behind.
Estate planning, there's a reason why the last statistic I said 85% of Americans do not have a competent plan, which that means it's incompetent and not going to do what they want it to do when called upon. That's a huge number. And we see it. It's why we partner with Provision Law, Carrie, Anna, and Keith. They come into our office and do evaluations and review and do no-cost consultations. Yeah, if you don't have, come on in and visit. Again, there's no cost for an initial consultation with them. Not updating wills or having a trust or powers of attorney. And this applies to adults that are 18 and above. So it shouldn't be taken lightly. One that's so common is, do you have beneficiaries on all your accounts? And we see ex-spouses and no beneficiaries. And I don't know about my beneficiaries. Who is my beneficiary? Well, if you don't know, that's a potential problem just waiting to happen. So
Sure.
Part of what we do is make sure we have good dibs on who the beneficiaries are to make sure that something's not gone by the wayside. So estate planning really is a big one. And here's one, a lot of people, well, I'm just going to continue to work and I'll just continue to work past retirement age. And guess what? Unforeseen circumstances. All of a sudden life hits. There's layoffs.
Right.
I got a pink slip. There's health issues. And guess what? That oftentimes doesn't hold water because life happens, our bodies give out aches and pains, and you just can't do it anymore because you're not 20, 30, 40, or even 50.
Absolutely. And just spending. That is a real problem for those who are entering retirement.
Well, not knowing where you're spending, underestimating your spending, maybe not having a budget, underestimating healthcare and retirement. You should know what your habits and what your retirement habits are and where your money's going. Oftentimes I think we're burning through it a little faster than we thought we were. And again, have that discussion, not a fun discussion, but probably an important one. And then you got the emotions that I think last week we talked about, the psychology of money and investments. Right. The markets are up and down, and when the markets are down, you're ready to jump off the cliff or you can't sleep at night. Well, if that's you, you're probably not where you should be. So maybe get in the right spot, get in your comfort zone based upon your decisions. So you're not one of them that has untimely decisions leading to significant setbacks in your long-term planning. And for retirement, I hope it is long-term planning.
Right. And, Larry, one final one that kind of sticks out to me because you've talked about it is that a lot of people think that when they go into retirement, they won't pay as much taxes.
What we find is people pay more taxes in retirement, and I know that's not a good feeling or a nice thing for me to say, but it's reality. A lot of people that are nearing or in retirement, a good percentage, have done a good job saving for retirement in pre-tax accounts. And eventually there's going to come a day where those monies are going to have to come out. And where are they going to be taxed at a high tax bracket? When your Social Security is on, your pension's on, if you're fortunate to have that. So we see taxes are more relevant in retirement than ever before. So it's why we're very big into forward-thinking tax planning. Doing what you can when your income is a little lower, oftentimes in those earlier retirement years, to minimize the tax impact in those later years when you have to do required minimum distributions. So it's just using the tax code, which doesn't always make sense, to your benefit to the best of your ability. But if you're only getting taxes prepared and you're not doing tax planning, I'm guessing, and it's not a guess because I see it many times during every week, that you're not being tax efficient with your hard-earned retirement dollars.
Right. All right. So, Larry, we have talked about the key to staying retired for good. We know that there are a lot of people who are listening out there who are thinking to themselves, I'm not an NFL quarterback. I only want to retire one time. And we hope that we've given you some ideas about how to go about doing just that. But if you need a partner to help you, and to be perfectly honest, folks, most of us do need a partner. Again, we only retire once. Give the folks at Haven Financial Group a call. It's 612-504-8400. Let me give the number to you again. It's 612-504-8400. Let them know you heard us here on the radio. You'd like to retire, and you'd like to retire just once, and you're looking for a partner. Larry, this has been fun.
It has been, Kim. Always good to be with you, and look forward to next week, and go Vikings.